Good day, fellow investors. In 1991, in a 4-day Bloomberg interview, Warren Buffett said that if he was running a small amount of money, he could guarantee 50% a year. So he could guarantee. And this got me really thinking over the last weeks, because my goal over the last 5 years, since I'm here on YouTube and on my research platform, has been the stated one above 10%, but in my heart my goal was 15%. What did I deliver? Exactly 15%. And this got me thinking, what if I simply have the wrong focus? What if 50% would be my focus? And that's what I want to discuss today. We'll go through what Warren Buffett did, his strategy, his main points in finding great investments. We'll apply that to the current situation, to our current YouTube portfolio, and then see how the strategy would fit us over time. And just a side note here, I firmly believe that in life you get what you focused on. When I was 19, this was my dream to to go around the Adriatic, and I didn't have the money to buy it, nor did I know how to buy this. But I put this picture on my room door, and after a few years that I saved something, invested, I had the money to buy this. In life, it is about what we focus on, then our mind finds the way to get there, and therefore I'm starting now to analyzing, okay, 15% per year, Sven, you did well, but what if I can do better? I have also added this to my research platform, written about it, checked all the stocks that we have covered, how they fit this, and then being this an added focus here, I think it should add value over the years. Maybe not 50%, maybe yes, time will tell, but if we can improve doing investing with less risk, that is great. Let's now look at what Warren Buffett suggests. In his interview, I have taken 4 things that are part of his strategy and that will likely also help in the 50% per year strategy. So, great company into temporary trouble. You want to buy them when they are on the operating table. So, of course, we want to deal with great businesses, but then take advantage of temporary issues. The second thing is smaller size, because Warren Buffett already has to look for elephants, but the opportunities might be in the mosquitoes. One stock that I discussed here that is certainly of smaller size, you can check this video. I'll put the link here and also in the description below, is Amsterdam Commodities, so definitely smaller size. So that might be a good opportunity to watch, just to think about a different universe than looking at the elephants. The third thing is patience. So today in 1999, Warren Buffett had 15 billion in cash. Now, a year ago, you just have to add a 0, and he was getting 0.5 on it. Okay, now he's getting again 4 or 5%, which is good, but what he says that you need to have the discipline to wait to find those really good, extraordinary values. And that's also something to keep in mind when applying a 50% strategy. The fourth one is you have to believe that markets are irrational and inefficient, because human nature has not changed. People will always behave in manic depressive ways over time. They will offer great values at times to you. And of course, timing is of crucial importance when it comes to 50% targets. Times have changed since Warren Buffett destroyed the Dow in the 1950s, because those investments where you simply find a company in New Jersey that is trading at 10% of its cash position are gone. So we have to think differently, and these 4 points certainly help in thinking differently. But now let's dig into the 50% per year plus investments that we have made over the last 5 years, some here on YouTube, some on my research platform, and see if there is strategy that can, let's say, put things in a better perspective, or what do those investments have in common, something that has worked, and then of course we have to try to apply it going forward. One of the first research reports that I wrote when I launched my research platform was a complete analysis of the solar sector. And one of the stocks that I bought in 2018, here there was a little crisis because Chinese subsidies went down and the market panicked, but the structural trend was there, and I started buying Scatec Solar, which was a small globally solar project development company, and it did really well. I think I sold the last somewhere here, of course a little bit too early, but you never know. I stopped liking it when they made a crazy acquisition, and the crazy acquisition has completely backfired. This is really bad, but they have changed strategy, got greedy, and here is the result. I will revisit it as it is now, where it was when I first bought it, but we made a great return here, 200%, which fits the 50% per year return. Another stock that I made an analysis back in 2018 said how it could be a better buy if it goes cheaper, and it actually went cheaper, is SolarEdge. Of course, at that point I didn't understand, nor do I now, the inverter technology, therefore I said this is too complex for me, but this also was a 50% per year investment that did really well thanks to the solar structural trend. Another stock that we also did a video on in 2020 was Nutrien. I think I made in a few months about 66% on that in a large portfolio that I was managing in 2020, so that also did well. And if I check the analysis from back then, the calculated average cyclical free cash flow was about 2.5 billion in 2019. The market cap was below 20 billion, so an intrinsic long-term average return of above 15%, which makes things very cheap. Of course, sooner or later fertilizers do rebound, and that has happened exactly as planned. And then you sell when the return is better. Of course, we had oil stocks. I told you that those are extremely cheap, extremely low. I bought some Russians, I got out in time, so okay, but whatever you bought practically then did really well. Another cyclical was a steel company that I was looking. The market cap was a quarter of this, 2 billion, and I calculated that the company can make 1 billion in free cash flows, which is exactly what they are making now. The result, pretty good. I think I bought here, sold something already, again, too early, and the final part here. It is a cyclical. We might come back to steel when the time is right. Another good buy that we did really well was Glencore, around 160. We sold earlier, but I think pretty high. Commodities play, so I like to buy them low and sell them high. So that worked well. Another one that we did a video on in October, November 2022 was China, where I said China is extremely oversold. As Warren Buffett said, you need to believe that the market is irrational, clearly irrational. We bought that for our portfolio. I bought some other individual stocks for my research platform portfolio. So that was, again, a psychological perspective on the market that also worked. As from October to January, the ETF did 73%. I already closed everything down in the YouTube portfolio, and when it becomes oversold again, we'll certainly look back at this again. Now, I've made a small sketch to show, okay, what are we looking for when it comes to this 50%? How can you make 50% with less risk? Now, with many good businesses, there is a clear business trend. The business continues to do its own thing, but the market is crazy and irrational. So to make 50 to 100%, you need to really take advantage of the market, be greedy when others are fearful, and try to look for those temporary issues that might plague a portfolio. So we'll continue to do this, a lot of cyclical, and we'll discuss the negatives too in a bit. But first, let's check our YouTube portfolio and discuss whether there are 50% return opportunities there now. Now, this is a stable company's growth, dividend. Every stock can go 50%, but up in the next 6 months, a year. It is possible, but it is not really likely. This is more a good, stable investment that I have to make an analysis video in depth soon. This is just an all-weather strategy. Unlikely that gold will go up, possible, but then unlikely. Intel will likely go up 50% or 100% at some point in time when the semi-cycle reverts, 2024, 2025, so we are following for that. Berkshire is too expensive, crazy expensive, and Amazon is a good risk and reward situation, but maybe if it falls 50%, who knows why, then it might be a 50% return. Now it's just a strategic play as we discussed in the last video. So nothing stellar here, just good ideas, and we'll continue to build on that. And then with the new perspective, when something hits 50% per year potential, we'll try to emphasize it. But as with any strategy, there are also negatives. And the negatives are that you need to wait if you don't have the option to invest. But then Warren Buffett says he would always be fully invested, thus I better get to work to find opportunities. Trading, you need to manage risk and reward, but first risk, which means that when something goes up 40-50%, on the same basis, you might need to sell, miss another 50% up, but that is normal when it happens, depending on the risk and reward. Of course, these are sweet problems, but something you can never know as you can't predict the future. What you can focus is risk and reward. Of course, more trading, if there are profits, more taxes, no romantics, owning businesses forever. Even Warren Buffett owns just 1 out of 10 businesses, don't forget that. And then pure value investing would this be. Sizing, there is always risk. Nothing prevents something that went down 50% to go even lower. So certainly not easy, and over time we'll certainly find many more negatives that don't come up to my mind now. Going forward, I'm starting to think, okay, if I focus on something, I might find an opportunity that really I can say, okay, this is now 50% in a year, or 100, 150%, 200% in a few years. And that's something that should add value over time, but also structure my focus. And I firmly believe that you get in life what you focus on. So I have added this on the second spot on my research platform. And here on YouTube, I'll let you know how it goes in a few years. Thanks for watching. I'll see you in the next video.